Every trader dreams of the big win, the trade that changes everything. But the truth is, massive wins are never built on massive risks. They're built on the smallest decisions you make, repeated with absolute consistency. A tiny trade becomes powerful not because of its size, but because of the mindset behind it. When you stop trying to predict and start learning to respond, when you stop demanding that the market reward you and start allowing the market to express itself, suddenly the pressure lifts. You become free to take the small, clean, effortless trades that others ignore. And it's those trades, the ones without emotional baggage, that create real, lasting growth. Your job is not to make the market move. Your job is to trust your edge, execute the tiny opportunities without hesitation, and let probabilities unfold over time. One small trade with the right mindset is worth more than 100 trades, driven by fear or hope. Your edge isn't in the trade, it's in your mindset. This single idea has the power to transform the way you experience the market, the way you pull the trigger, the way you handle wins, losses, hesitation, fear, and opportunity. Most traders spend years searching for the perfect setup, the perfect signal, the perfect indicator, the perfect technique. They believe that if they could just find the right combination of tools, everything would fall into place. They think mastery is out there somewhere on a chart, hidden behind a moving average or a candlestick formation. But the truth, the uncomfortable truth most traders avoid, is that the market doesn't care what you know. It only reflects what you do. And what you do is dictated entirely by your beliefs, expectations, and emotional conditioning. This is why two traders can look at the same chart, take the same setup, and walk away with entirely different results. One takes the trade with clarity, confidence, and acceptance. The other hesitates, doubts, second guesses, tightens his stop, moves his stop, panics out early, or refuses to get out when he knows he should. They didn't experience different markets. They experienced different internal worlds. The difference wasn't the trade. The difference was the mindset. When you understand this, you begin to see the market not as a puzzle to solve, but as a mirror reflecting your internal state. If you are fearful, the market will reflect fear. If you are greedy, the market will amplify greed. If you need to be right, the market will give you endless opportunities to defend or attack your own ego. But if you are neutral, if you approach every moment with curiosity instead of control, then the market becomes a place of endless possibility rather than constant threat. Your mindset shapes your perception, and your perception shapes your decisions. Most traders are not battling the market. They're battling the fear of being wrong, the fear of losing, the fear of missing out, and the desire to feel safe in a place where certainty does not exist. The market has no obligation to make sense, to be fair, or to reward your effort. The only thing you can control is how you respond to what unfolds. The first step toward building a powerful mindset is accepting that anything can happen. Not sometimes, always. Every moment in the market is unique. The fact that a pattern worked 20 times in a row does not guarantee it will work the 21st time. The fact that a breakout failed yesterday does not mean it will fail today. The market is a living environment shaped by the perceptions of millions of participants, each acting on their own beliefs, needs, and emotional impulses. Once you truly accept that anything can happen, you stop trying to predict the future and begin to operate in the present. You stop forcing trades and start allowing trades. You stop needing to be right and start flowing with what the market actually gives you. From this mindset, tiny trades become powerful because you take them without emotional distortion. You take them because they match your edge. Not because you're afraid of missing a move, not because you're trying to make up for a loss, not because you're chasing some fantasy of hitting a home run. Your focus shifts from outcome to execution. You begin to understand that the quality of your mindset determines the quality of your decisions, and the quality of your decisions determines the quality of your results. Your edge has nothing to do with how extraordinary you are, or how brilliantly you analyze charts. Your edge is simply the probability that, over time, following your plan will produce a positive result. But even a high probability edge is worthless if your mindset doesn't allow you to execute it consistently. Fear will stop you from entering. Hope will stop you from exiting. Impatience will push you into trades you shouldn't take. Revenge will lead you into self-destructive behavior. And ego will blind you to what is actually happening. A trader with an exceptional strategy but a weak mindset will always sabotage himself. He will override rules, ignore risk, and make excuses for his behavior. He will treat the market as if it owes him something. He'll take a small loss and turn it into a disaster because he can't emotionally accept being wrong. He'll take a winning trade and suffocate it by closing too early because he fears losing the profit. In every case, the issue isn't the strategy. It's the mindset that cannot handle uncertainty. On the other hand, a trader with an average strategy but a powerful mindset can perform far better than expected. He understands his edge is probabilistic, not predictive. He knows that any single trade is meaningless in isolation. He doesn't elevate wins as proof of brilliance or interpret losses as proof of failure. He treats each trade as one event in a long series of events. Because he does not assign emotional significance to any single outcome, he is free to execute cleanly with no internal conflict. That internal freedom, the freedom from needing a particular outcome, allows him to take small, consistent trades again and again. Over time, these small trades compound. The consistency born from psychological stability becomes a weapon far more powerful than any indicator or setup. When you approach the market with this mindset, uncertainty stops being a threat. It becomes an opportunity. You begin to trust your edge because you trust yourself. You begin to trust yourself because your actions align with your intentions. You develop emotional resilience, not because you've eliminated fear, but because you've learned not to act on it. You accept risk fully before you enter the trade, so there's nothing left to fear once the trade is open. You release your attachment to outcomes so the market can no longer manipulate your emotions. This internal equilibrium is what allows you to stay calm when others panic and stay patient when others chase. The mindset that creates massive wins doesn't rely on intensity or luck. It relies on neutrality. Neutrality is not indifference, it's clarity. It's the ability to see what is actually happening without projecting your hopes, fears, or expectations onto the chart. In this state, tiny trades become easy because there is no internal debate. There is only observation, decision, and execution. Over time, this creates a rhythm, a stable psychological rhythm that allows you to operate effortlessly within the market's randomness. Success in trading isn't about the size of your trades, it's about the size of your discipline. It's about the consistency of your mindset. It's about your ability to take small opportunities without emotional interference. One clean, controlled trade taken with the right mindset is more valuable than 10 impulsive trades taken out of frustration or excitement. When your mindset is balanced, every tiny opportunity becomes a building block for long-term growth. You stop focusing on the money and start focusing on the process. And when your process becomes consistent, the money follows naturally. Your edge is not the signal, it's not the pattern, it's not the chart. Your edge is the mindset that allows you to follow your rules without hesitation, without fear, without ego. The market rewards those who can remain emotionally neutral in a landscape driven by emotion. The moment you stop trying to control the market and start mastering your own internal environment, you unlock a power that most traders never experience. The power to act without fear. The power to stay disciplined under pressure. The power to turn tiny trades into massive wins, not because the trades themselves were extraordinary, but because you were. Consistency is born from neutrality. It's a simple statement, yet it contains the entire psychological foundation of trading success. Most traders spend months, even years, searching for consistency in their results, profits that repeat, patterns that hold, behaviors that don't collapse under pressure. They look for the next strategy, the next tweak, the next confirmation signal that will finally make everything predictable. But consistency in trading does not come from adding more information, more indicators, or more rules. It comes from the one place most traders overlook: the internal emotional environment from which every decision is made. Neutrality isn't just a desirable trait. It is the core requirement for producing stable, repeatable actions in an environment defined by randomness. To understand neutrality, you must first understand why inconsistency exists. Every inconsistent action you've ever taken in the market was driven by emotion, fear, excitement, frustration, revenge, the need to be right, the desire to avoid pain, or the hope of a miracle reversal. When emotions are in control, actions become reactive, and reactive decisions cannot be repeated with precision. You cannot build consistency on top of emotional volatility. You cannot follow your system when your mind is filled with noise. In trading, the mind is the only instrument, and neutrality is its calibration. Neutrality is the state of observing without projecting, acting without emotional attachment, and responding without internal conflict. It is not apathy, it is clarity. It is the absence of emotional distortion, the very distortion that causes traders to enter too early, exit too late, hesitate at the worst moment, or break their own rules. When you are neutral, you see the market as it is, not as you need it to be. You stop asking, will this trade work? And instead focus on, does this match my edge? You no longer see wins as proof of superiority or losses as proof of failure. Every trade becomes one event in a long series of events. From this mindset, consistency emerges naturally because the decisions you make are no longer influenced by fear or hope, but by intention and structure. Neutrality requires full acceptance of risk. As long as you resist the possibility of losing, you cannot operate neutrally. If you take a trade while secretly hoping the stop loss won't get hit, you're already compromising your mindset. You're trading with a part of your attention focused on avoiding emotional discomfort. This split focus distorts perception and decision-making. When you fully accept the risk, you eliminate the emotional attachment to outcome. You trade with clarity because there is nothing left to fear. The worst-case scenario is already accounted for. The loss, should it occur, was accepted before the trade was placed. This acceptance creates emotional equilibrium. Think about the last time you traded while feeling pressure, whether from recent losses, external stress, or the desire to make back what you lost. In those moments, emotions override logic. You might have opened a position that wasn't part of your plan, skipped a stop loss, or held onto a losing trade hoping it would turn around. That's not inconsistency born from lack of knowledge. It's inconsistency born from lack of neutrality. When you are emotionally charged, you perceive the market through the lens of that emotion. Fear will make you see danger where there is none. Greed will make you see opportunity where none exists. Impatience will make a mediocre setup look irresistible. Neutrality removes that distortion and gives you a clear view of the market's actual conditions. Consistency is a process, not an outcome. A trader who is neutral follows the same process regardless of the last trade's result. A loss does not induce hesitation. A win does not inflate confidence. Both are simply outcomes of a probabilistic system. When you internalize the idea that anything can happen and no single trade matters, neutrality becomes easier. The market stops influencing your emotions because you no longer depend on any one trade to validate your skill or identity. You no longer interpret market movement as a personal judgment. Instead, you treat each moment as information, nothing more, nothing less. Neutrality also transforms how you handle uncertainty. Uncertainty is the breath of the market. Every tick, every candle, every breakout and reversal is infused with uncertainty. Most traders fear uncertainty because they equate it with danger. They try to find comfort through confirmation, analysis, and prediction. But prediction is the enemy of neutrality. When you predict, you attach yourself to a specific outcome. If the market moves against your expectation, you feel threatened. Your emotional brain activates survival mechanisms. You tighten your grip, override your rules, or close prematurely. But when you adopt a neutral mindset, uncertainty ceases to be threatening. It becomes the natural condition. You move with it instead of resisting it. You stop demanding certainty from an environment that cannot provide it. Neutrality creates a psychological buffer between stimulus and response. Something happens in the market, but instead of reacting instantly, you observe first. You let the information pass through your filters without triggering emotional reflexes. You ask, is this part of my plan? If yes, you act. If no, you wait. Waiting becomes easier because you have no emotional need to force a trade. Neutrality gives you patience. Patience gives you selectivity. Selectivity gives you consistency. Neutrality is also deeply tied to discipline. Many traders think discipline is about forcing yourself to follow rules. But discipline becomes effortless when neutrality is present. If you are emotionally attached to a trade working, discipline becomes difficult because your emotions are fighting your rules. But when you are neutral, there is no internal battle. The rules make sense. You trust them. And you follow them because they reflect your plan rather than your impulses. Discipline without neutrality is fragile. Discipline with neutrality is unshakable. The market is a psychological battlefield, but neutrality makes the battlefield irrelevant. Instead of fighting the market or fighting yourself, You stop fighting altogether. You simply execute. It's in this mental state that traders experience what feels like flow, effortless, smooth execution where decisions come without friction and emotions remain in the background. Flow is not something you chase. It emerges naturally from neutrality. A neutral trader also sees losses differently. Losses are not personal failures or emotional events. They are simply business expenses, the cost of operating in a probabilistic environment. Because they are expected, they no longer provoke fear or stress. And when losses stop carrying emotional weight, they stop influencing your next decision. This is what consistency looks like. You execute your edge the same way after a win or a loss. You remain stable regardless of what the market does. That stability is the ultimate competitive advantage because very few traders ever reach it. Neutrality also allows you to stay aligned with your long-term goals. When you're emotional, you think in terms of immediate gratification, quick wins, big profits, fast recoveries. This mindset pulls you away from the strategy designed to produce long-term growth. But neutrality keeps you grounded. It prevents you from chasing. It prevents you from forcing. It prevents you from reacting impulsively. Instead, you operate with the calm understanding that consistent execution leads to consistent results over time. The outcome of any single trade becomes irrelevant because your confidence is placed in the process, not the moment. Finally, neutrality unlocks a deeper level of self-awareness. It allows you to observe your internal patterns without judgment. You begin to see when fear is whispering, when greed is pushing, when impatience is tugging. You catch yourself before emotional impulses turn into actions. This self-awareness compounds just like profits compound. Over time, you begin to trust yourself in the market, not because you always win, but because you always act with integrity to your system. That trust produces stability, and stability produces consistency. Consistency is not a lucky streak or a statistical anomaly. It is the natural result of a neutral mindset. It's born from emotional balance, probabilistic thinking, acceptance of risk, and the ability to observe the market without distortion. When you stop treating the market as a source of emotional fulfillment and start treating it as a neutral environment, you free yourself to make clear, disciplined, consistent decisions. And when your decisions become consistent, the results naturally follow. Consistency is born from neutrality because neutrality frees you from the emotional chaos that destroys discipline, clouds judgment, and fractures execution. When you become neutral, you become consistent, not because the market becomes easier, but because you become stable enough to operate within its uncertainty. Tiny trades compound because your discipline compounds. Most traders misunderstand the nature of growth in the markets. They look for big trades, big moments, big breakouts, and big wins. They want the spectacular move that erases months of frustration or validates their belief that one trade can change everything. But trading is not built on spectacle. It's built on repetition. It's built on small, intentional actions that seem insignificant in isolation but become transformative when executed with unwavering discipline over time. Discipline is the true engine of compounding. And when your discipline compounds, even the tiniest trades can evolve into powerful, life-changing results. A tiny trade by itself is just a small event. It doesn't move your account dramatically. It doesn't bring excitement. It doesn't give you a story to brag about. But the point of the tiny trade isn't the immediate payoff. It's the psychological precision required to take it. A tiny trade forces you to trust the system rather than your emotions. It requires you to enter the market without hesitation, without projecting fantasies or fears onto the outcome. Tiny trades are clean, simple, and unemotional, and they give you the perfect environment to practice execution. Each small trade becomes a training repetition, reinforcing the habits that ultimately shape your long-term trajectory. The compounding process begins not in your account balance, but in your behavior. Every time you take a tiny trade exactly as planned, you strengthen the neural pathways associated with discipline. You reinforce the identity of someone who acts intentionally rather than impulsively. You become the kind of trader who follows through, who sticks to the rules, who respects the edge, and who understands that the power of a system isn't in its individual trades, but in its cumulative effect over thousands of repetitions. This is where real mastery begins. In quiet, unnoticed acts done consistently, not in dramatic victories won occasionally. Think of discipline as a muscle. The more you use it, the stronger it becomes. The more you neglect it, the weaker it gets. Tiny trades are like daily workouts. They may not look glamorous from the outside, but they build the internal strength required to handle bigger opportunities later. When you force yourself to stick to your plan in the smallest moments, you are preparing yourself for the psychological pressure of larger trades and larger positions. You're building the emotional resilience, the patience, and the clarity needed to operate effectively when the stakes rise. Most traders fail not because they lack a strategy, but because they lack the discipline to apply the strategy consistently. They break their rules when they're bored, stressed, overconfident, or fearful. They skip trades because they doubt themselves. They take impulsive trades because they want action. They hold losers too long because they hope the market will bail them out. They close winners too soon because they fear losing the profit. In every case, inconsistency destroys the compounding effect. Without discipline, no edge can survive. Tiny trades are an antidote to this chaos because they remove emotional intensity and give you a manageable space in which to build consistency. When you commit to taking tiny trades with perfect execution, you start building a chain of disciplined actions. Each disciplined action strengthens the next. Over time, this compounding discipline creates extraordinary stability. You stop fighting the market. You stop fighting yourself. You begin to flow with your edge instead of questioning it. With each correct execution, you reinforce trust. Trust in your process, trust in your mindset, and trust in your ability to follow through. As trust increases, uncertainty decreases. Stress decreases. Hesitation fades. Discipline becomes natural rather than forced. This is where compounding truly begins, when discipline becomes effortless. Effortless discipline creates consistency. Consistency produces predictable behavior. And predictable behavior applied to a statistical edge produces predictable long-term outcomes. You are no longer relying on luck or emotion. You are relying on structure. You are relying on the accumulated force of hundreds and thousands of small, disciplined actions that gradually shape you into a high-level operator. Tiny trades are also where risk is most manageable. When risk is small, fear is minimized. When fear is minimized, your mind stays clear. Clarity is the soil in which discipline grows. You learn to detach from the emotional weight of any single trade. You stop needing the market to reward you right now, this moment. You stop chasing the next big win. You start thinking in terms of weeks, months, and years instead of minutes or hours. This shift alone is enough to separate you from 90% of traders who are ruled by immediacy and short-term gratification. Over time, tiny disciplined trades also build your tolerance for randomness. You stop reacting emotionally when a setup fails, because you understand that failure is part of the statistical distribution. You stop celebrating excessively when a setup wins, because you understand that wins are just another part of the distribution. You develop the emotional neutrality required to act consistently in an unpredictable environment. This neutrality is one of the most powerful forms of discipline a trader can possess. Tiny trades also eliminate the dangerous psychological swings that come from trading too large too soon. When your position sizes are small, you stay grounded. You avoid the emotional roller coaster that leads to revenge trading, overconfidence, or panic. You prevent the catastrophic mistakes that wipe out weeks of progress. You maintain smooth emotional energy, which creates smooth execution. This smoothness allows discipline to accumulate like quiet momentum. As discipline compounds, something remarkable happens. Your account begins to follow. Not because you forced it with oversized trades, but because your consistency created a stable foundation for growth. When your behavior becomes consistent, the equity curve naturally begins to stabilize. Drawdowns become shallower. Winning streaks last longer. You stop giving back profits through emotional decisions. You start building your account one tiny, intentional step at a time, and each step strengthens your identity as a disciplined trader. Identity is the secret layer of compounding most people ignore. When you repeatedly act with discipline, especially in small, controlled trades, you begin to internalize the identity of a disciplined trader. You start seeing yourself differently. You see yourself as someone who does what they say they will do, someone who respects risk, someone who follows the plan, someone who is patient and deliberate. This identity shift is profound because identity drives behavior. When you see yourself as disciplined, you naturally behave in ways that reinforce that discipline. And when your behavior reinforces your identity, the cycle becomes self-sustaining. Over months and years, This compounding identity yields compounding results. Your trading evolves from emotional gambling into professional-level execution. Tiny trades become the foundation of a powerful, scalable system. Once discipline is deeply embedded, increasing position size becomes safe because your mind can handle it. You are no longer overwhelmed by pressure. You no longer sabotage yourself. You no longer operate impulsively. You operate with calm, stable control. This is the true meaning of tiny trades compound because your discipline compounds. It's not about the size of the trade, it's about the size of the behavior behind the trade. Discipline is the multiplier. Discipline is the catalyst. Discipline is the force that turns small steps into massive progress. Without discipline, even the best strategy collapses. With discipline, even a simple strategy becomes powerful. Tiny trades repeated with precision create a rhythm. A rhythm creates consistency. Consistency creates confidence. Confidence creates clarity. Clarity creates discipline. Discipline creates compounding. And compounding creates transformation. In the end, compounding doesn't start in your account, it starts in your mind. Tiny trades are the building blocks, and discipline is the cement that holds them together. If you nurture that discipline trade after trade, day after day, you will eventually look back and realize that the small, almost invisible actions you took were the very actions that built monumental results. Consistency, discipline, and neutrality are the silent forces behind every successful trader. Tiny trades may seem insignificant, but they are the foundation of long-term mastery. When you execute small decisions with clarity and emotional balance, you build the habits, mindset, and internal stability required for sustained growth. Over time, these disciplined actions compound, quietly, powerfully, and inevitably, until the results speak louder than any single trade ever could.